Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Tuesday. So let me tell you why I hate the TSLY fund and the Yieldmax fund so much. Part of it is I hate when I see people selling something, especially to retirees and others in that category, that is selling one thing, but the product is really something else. So I'm going to kind of explain what I think they do in terms of generating that income and why I see it as super risky, even though the sales pitch is it's for generating income. And if you're getting into that retirement phase, that you really should be careful about the funds you're investing in and how they actually generate what they're trying to generate, because you may not realize what you're actually buying and taking on more risk than you realize. So stick around if you find that interesting and if you're getting to that phase of life and if you're concerned about it as well as I am. Well, good afternoon. My name is Adam Kahn, and this is Investing with Adam K. Hope everybody's having a great week. I hope your portfolios are hitting new highs as things look okay. I know we had a bit of a bump this morning with a little bit more of escalation in the Ukraine war. Part of me wonders if that's going to go on until the January when things transition, because I'm guessing there might be some politics going on as to what's pushing things to happen quicker. Not total guess. And let's get into what I want to talk about, which is TSLY and the Yieldmax funds and my concern with it. Now, as always, a little disclaimer, you need to do your own research. Please don't listen to me. Just use this as entertainment purposes only. And you need to do your own research for making financial decisions. I'd even recommend reaching out to a financial advisor by all means, not somebody in the chat who talks about making zillions of dollars or reaching out to this one or that one to help you get rich. I think most of that's a scam, although I don't have any documented proof on it, but it's hard to imagine it isn't. And anyone promising you something that's unrealistic, I would question it anyway. But find yourself somebody to really help, or do your own research like I like to do, because I think it's very possible to be able to do your own research and find good investments. So let's talk about what the Yieldmax funds do to generate the income that they're deriving. So what they are doing is they are buying a synthetic stock. What that means is they're not actually buying the stock. I will use Tesla as an example because I use it all the time, and it's the one I watch the most in terms of the Yieldmax funds, which the one they have is TSLY. What they're doing is they're buying an at-the-money call and selling an at-the-money put instead of buying the actual stock. This does make you actually long the stock in all reality, because let's say Tesla closed around $340 a share. Total guess. I really know it's been in a range. Maybe that's where it is, maybe it isn't. So if they buy the $340 call, if the stock goes higher, they're able to exercise that option and be long 100 shares of the stock for each call that they've bought. They then sell an at-the-money put, which does similar. It requires that they buy 100 shares at $340 if we're using the same strike price if the stock falls. So no matter which direction it goes, it's the same as owning 100 shares. Now, why would somebody do that? One of a few reasons. One, either they would like to get leveraged. Reason, let me explain a bit. If you buy the at-the-money call and sell the at-the-money put, they're probably going to be pretty similar in price. So make up a number. Let's say it's $5 for the call and $5 for the put to make it easy. Well, you're paying $5 and you're receiving $5 to put on that trade. So at that current time, there's been no real money out of pocket. Does that make sense? I've paid $5 to buy the call. I've received $5 to sell the put. The firm that I have that account with is going to have me need a required amount of margin to have that trade. So if the strike price is $340, instead of having to put up $34,000 to be long 100 shares, maybe I only need 20% of that. So now either that allows me to buy up to 5 times as many of the position as I would need to be able to if I just bought the stock, Or the other way I could use that is have the 20% that's required as the margin requirement. Again, these numbers are kind of made up, but it's very possible to be in line with what the requirements would be. And then I have 80% that maybe I just put in a high yielding money market account to receive 5% return. And I'm actually doing okay that way. Now, the negative on this is you do get deterioration on the options. So it's not as simple as it sounds of like, oh, that's a free way to be long. But let me continue. What they then do to create the revenue to give that return that they're showing as a high yield is they then sell an out of the money call to be able to generate income. And they use weekly options. So if the stock's trading 340, maybe they go to a 350, possibly even 355, to be 5% increase in the stock before they get taken on the call, if they happen to get taken. What I don't like about this strategy is that is best case scenario. If the stock rallies and goes higher, you've made the money in the stock and you've collected the premium that you sold for the call. The negative is if the stock goes lower, since you're synthetically long, you have all of the downside risk. Now, I don't see Tesla dropping in half in a couple of days or a week and really having terrible deterioration. However, that's a lot of risk to take when the sales pitch is this is income that people can use for retirement or things like that. And when we look at the yields, annualized, it looks so attractive for people who might be getting into the retirement phase of life. Now, I'm sure it makes sense for some people, but I would hate to see somebody getting over attracted to the yield, putting on these funds that they figure have professional traders that are looking out for their best interests without realizing that, boy, if the stock market really collapses, I have full risk of being long the stock market, but I have limited upside if these stocks actually perform and go higher. I don't really necessarily see the value in that. And at least me personally, if I was putting on those types of trades, I would rather be putting them on myself where I understand them and I also recognize the risk I'm taking on. I don't know that I necessarily see a problem with the way that they're trading in general. What I do have a problem with is I think it's being sold to people who want to generate income that don't realize that this is a super aggressive a way to do it. And it should only be utilized for a very small percentage of a portfolio, if that. And if you need the income, I'm sorry to disappoint you. There isn't really a way to get 30, 40, 50% yield without taking on extraordinary risk. Unfortunately, it doesn't really exist. Now, if you're really young and you don't mind that kind of risk and you trust their traders more than you trust yourself, by all means, maybe it fits what your portfolio would want. But it doesn't fit mine, and I also don't think it fits a lot of people that are investing in it because I don't think they really understand what they're investing in. I also would highly doubt that the people selling those funds, if you're even going to somebody who's talking to you about it, explains it all that well. And I even wonder if they even understand what they do exactly. I think that they think it's just a way to be invested in Tesla and you actually are able to profit off of its, options, and they don't probably have a whole understanding of much more than that. So I really don't like the sales pitch and that I feel like it's taking advantage of retirees. Now, this was something I wanted to talk about in my Sunday Live. If those of you made it, unfortunately, we kind of ran out of time and I didn't get into it and discuss it. And for those of you who didn't make it, try to keep an eye out. I've been doing a live video, or I don't know if you call it a video, blog, whatever it is, on Sundays, 8:30 Pacific Standard Time. And I'm going to try to stick with that time a little bit because I wake up pretty early. It's just been cold out here. But the cool thing was I did it in front of the computer, so it allowed me an opportunity when people had questions about stocks or whatever else that they were looking at, that I have access to my charting and the other stuff that I use when I'm looking at my account, and I could answer a little bit better, especially when it was something that I don't follow necessarily, because even if it's something that I'm not paying attention to, if I can pull up the information, it's really easy for me to look at the news that I get on it, the information about the company or the ETF, as well as see the chart and get a good feel of what I think of it. So hopefully some of you who didn't make it can make it this coming week. It's a lot of fun, at least for me. I like having the interaction and chatting with you guys. I know weekends can be tough, and I know the time might be tough, and maybe even I add some more because, again, I think it's kind of fun to be able to have some interaction with the people watching the channel. Also, if some of you are watching who are at the live and saw the questions about Dow, DOW, as well as some others, I actually did get out of them. Um, I didn't sell Pfizer. I got a little bit stubborn on it, just because I don't know. I think all the news that's going on, maybe it's oversold. Maybe Dow is as well, but it's just something that's sitting, and I was able to take the loss for this year and offset some of the gains. I know somebody had asked in the live, so I thought I would share that so they knew where I was at my position. I don't plan on buying it back. I think there's other places that the money would work better. I have bought more Portillos. I know I talked about that a little bit. And I actually bought a little bit of the OKLO, which I've mentioned a little bit from time to time, mainly because of the nominee for the Secretary of Energy, that he's on the board there. He actually is either CEO or something else of another company as well, Liberty Energy, that I looked at, but I stayed away from, mainly because it looks like their earnings have been deteriorating, so I'm not quite sure what's going on. Maybe being in the position will really help them and it could turn it around too. But I just stuck with the nuclear one. I think it's a big gamble. I don't think it's one that I'm ready to just put a ton of money in and take that kind of risk. But I thought maybe a good opportunity and maybe get lucky. Also, Sam Altman is on the board there, which is a good name to be associated with. Um, anyway, just wanted full disclosure what I had done. This is not my trading account. I don't really plan to do much different or play around with it. Just put it away, hoping for the next 3 or 4 years that it does well. Anyway, anybody who's made it this far, thank you so much for paying attention and watching the video. I really appreciate the support. If you've made it this far and you're new to the channel and you haven't subscribed yet, please do me a favor and hit that subscribe button. Those of you that are subscribed, and even those who aren't yet, if you enjoy the content and could do me another favor and touch that like button and give me a thumbs up, really helps the algorithm, and I really appreciate it. It's been super cool watching this stuff happening. And oh my God, Bitcoin. I can't believe I haven't even talked to it. It seems to be poking at new highs. I thought I saw it traded above 94,000 per coin. Um, Same thing with this DOGE department. It's hard to imagine that it doesn't have room to run. I'd be a little nervous buying it up here, but it looks like it could continue. Let me know your thoughts. Did you guys buy anything today? Are you watching anything that you think is going higher? Did you sell out of anything? Like, what are your thoughts too? I love the commentary and the conversations. Again, thumbs up, like, subscribe. Have a great day, and hope all is well.